a little backstory to that. So, just living my life, everything's fine. And then one day at work, one of the coworkers comes by and she says, "Hey, Andrew, look, I just earned $50." I said, "What? How did you do that?" And she says, "Well, I bought a call, the stock shot up, and I closed it, and I made $50." And I was like, "Okay, well, that's cool. Tell me more," right? So she told me enough that I could go on YouTube and start researching. Then after about a week or two, I go back to her and I said, "Okay, what do you know about Delta and what do you know about Theta? You find a dividend stock that has been producing forever, that your mom, dad, all your relatives know, Clorox, Pepsi, Coca-Cola, Bank of America, that have been around before we were born, is going to be around after we die, right? And the stock that you want to own for the rest of your life." That's it.
Everyone, this is a interview that we're going to do with our top performer. Andrew was a top performer for us. I've been trying to schedule this interview, and for my lack of time, I haven't been able to do it until recently. But we are going to jump into this interview and get to know Andrew, and then we're gonna open it up for questions that you guys may have for Andrew. All right, so let's get started. Thank you, Andrew. I appreciate you being able to do this. Definitely come on camera and so forth, so members can learn from your experience. It's always important to learn from each other, and that's one of the things we want to build here at Dorian Trader and Foster. So I'm going to start off by just getting a little background information from Andrew. So Andrew, can you provide us your name and let us know where you are calling in from?
Yeah, so my name is Andrew Bernal. I live in Tustin, California. That's Orange County. It's in Southern California, about 45 minutes southeast of Los Angeles.
Okay, awesome. So Andrew, what do you currently do right now for a living? Because it's kind of an interesting question. People want to know, how do you find the time for trading? Do you trade full time? Do you work full time? Give us a little background on what you do currently for a living.
Well, when I graduated from college, I became a physician assistant. I was a physician assistant for 19 years, and then I got a divorce. And then after the divorce, I had a clean slate, a blank slate, so to speak. I went out with a girl who was an attorney, and then I became an attorney. So I went to night school and I studied law for 4 years, and I've been a lawyer for about 12 years. I work in workers' compensation, insurance defense. I work from home. My employer doesn't care what I do, how I do it. I just got to get the job done. I need to reach a certain number of billable hours. So at 6:30 in the morning, up, I get up like at 5:30, somewhere in there. And by 6:30, I'm in front of the computer every day. And I just love options, and I trade options, and then somewhere around 8, I try to stop at 8 o'clock, but it's so much fun that I can't stop. And then at 8:30, it's like, okay, that's enough. I have to get to work. And then it's like, I tell you, it's like, okay, you work for a little bit and get a little tired. It's like, I take a little break, check my stocks. And it's like, no. I always check, I stop at 8:30, but then I check at 10, and then I set an alarm at 12:30 to recheck right before the market closes. And I'm trying to wean myself off of that 10 o'clock check, because I have to spend some time doing work. So yeah, so that's what I do for work, and yeah.
So Andrew, you said something that I don't want to gloss over. You said you were a PA, a physician assistant, which is a really good profession, right?
Yeah.
And then you said you met someone and they were a lawyer, and so you became a lawyer. Is that how it went down? Is that the fast version, or?
No, okay, so I got a divorce, and then during the divorce, I went out with a girl a couple times, and she was an attorney. I thought it was really fascinating, so I talked to her about it. And then I said, "Do you think I'm smart enough to become an attorney?" And she's like, "Yeah, you are. You should try it. If that's what you want to do, you should do it." And so what caused me to change is I was working in workers' compensation, but on the medical side, and it was very kind of mechanical. A lot of the same types of injuries over and over. And then after 10 years, I said, okay, 10 years from now, I will essentially be doing the same thing. There's not a whole lot of upward mobility. Yes, I'll make a little bit more money, but my day-to-day really won't change very much. So what will allow me to have more upward mobility, more diversity? And so, I thought about going to medical school, but it's like, with medical school, you don't get credits for your PA work. You basically have to start from the beginning. So the lawyer idea was a lot more attractive, because I already had the degree, so I just need to take the LSAT and then apply and get into law school type of thing. So looking back about how intensive and how hard the work was going through law school, I think a very viable other option would have been simply to move out of move out of workers' compensation
Mm-hmm.
and move into another subspecialty. Like I would have liked like surgery or some other area that would have been a little bit more challenging.
Okay. Okay. So just to kind of help people who are listening, Andrew, before we start talking about trading,
Mhm.
what's your lifestyle like right now outside of the markets? And do you have a family? Do you
Oh
know
yeah,
you
yeah.
have some hobbies you like to do?
Yeah, so I've been married for 18 years to my wife, Katie. She's from New Zealand, so we go there about every other year.
Okay.
So we'll be going there this December. I have two children, Ben, who's 32, and Tanya, who's 38. Now, the only reason I say Tanya is my stepdaughter is because when I say I have grandchildren, people are always like, "Oh, you're so young." It's like, yeah, well, she's my stepdaughter. I love her to pieces, and I love the grandchildren even more if that's even humanly possible. I see them every weekend. They're the highlight of my life, and I try. Romy's 5, Kira is 3,
Mm-hmm.
and I am determined. I'm going to teach them how to trade options. Now, so they figure out what a $1 bill is. They haven't quite figured out how a $1 and a $5 bill interplay. They know that there are 4 quarters and a dollar, but beyond that, it's going to take a little while to get them on board.
Hey, I love it. I'm gonna try to do the same thing. I've been trying to convince my wife to allow me to do a kind of series on teaching my daughter how to trade, right? And but my wife right now has been a little hesitant to have my daughter on camera too much, and so
Yeah.
but it's definitely something I want to do. I'm going to do it regardless on camera or not. But I thought it would be entertaining for people to kind of show them how I would teach my kid, and maybe they can take some pointers, do some things differently, do some things the same. But it's a challenge with that age though, Andrew. But I commend that you're doing it.
Yeah, it just as time goes on, I'll just keep teaching them concepts. But I love trading. I'm just saying that the whole interview. I love trading.
So, how did you first get introduced to the stock market and trading, Andrew? Let's start talking about some trading now.
Well, when I became a physician assistant, I started making some money. I didn't know what to do with it. So then a friend of a friend was very successful financially, and they said, get Vanguard, start buying ETFs. I don't think there were ETFs back then. Get into mutual funds. And so, I did okay with mutual funds, just throw the money in there, forget about it, and it grew and everything was good. Then I started, I was like, man, I'm such a genius. Let me try some of these individual stocks. And it was very hit or miss. So I was like, okay, fine, whatever. Um, so that was really the extent of my
So
uh,
Vanguard, then you got
oh yeah.
started with Vanguard. So obviously, people listening, most of us have heard of, not all of us heard of Vanguard. That's how a lot of us participate in these markets now through 401ks or whatever the case may be. But it's definitely how most people participated back probably when you got into that, Andrew. And so how long have you been a member of the Dorian Trader, and how has the community kind of impacted you, Andrew?
Well, I started with the Dorian Trader in 2021,
Mhm.
and I think I opened up my TastyTrade account in about August. And and a little backstory to that. So, just living my life, everything's fine. And
Mhm.
then one day at work, one of the coworkers comes by and she says, "Hey, Andrew, look, I just earned $50." I said, "What? How did you do that?" And she says, "Well, I bought a call, the stock shot up, and I closed it, and I made $50." And I was like, "Okay, well, that's cool. Tell me more, right?" So she told me enough that I could go on YouTube and start researching.
Mhm.
Then after about a week or two, I go back to her and I said, "Okay, what do you know about delta and what do you know about theta?" And
Mhm.
she had no idea. And once she said that she didn't know, I
Mhm.
knew that her winning was just luck.
Mhm.
But I had learned enough that I knew through theta that you could set it up in such a way that you can make money without it being just luck.
Mhm.
So in searching through YouTube, I came across your channel. Back then, it was the Dorian Way.
Mhm.
And it's like, okay, this is it. And there's something about me that I love money. And it's not necessarily like, oh, I want to spend it and I want to buy these cool things, but it's just like the challenge of making money. I just love the challenge. So just to give you an idea, in my work we deal with a lot of money. We negotiate and fight over money, but I
Mhm.
treat it like it's my money, right?
Mhm.
And just this is a crazy example. We went as a company to a baseball game. I think it was the San Diego Padres, and we purchased one too many tickets or someone didn't show up. So
Uh-huh.
the tickets were just going to go to waste. So then I said, okay, well, just for fun, I'm gonna go scalp that baby, right? I don't want the money. I just want, I just love the challenge and the experience. So then I sold it, and then with the money, I think I just bought more food for the group. But just things like that. Just like I love producing and making money. Another thing that some of our traders might like is I do this now. There's a website called neighbor.com, and you rent space. So I have an extra parking spot on my property, and so I rent out a parking spot for $100 a month. And then on my side yard, I have like 6 feet space, and I have a little dinghy boat that I get $50 a month on. And I don't think my wife will let me rent out any more space, but you can rent out any space. So I just love making money.
Oh, that's awesome. That's awesome. I haven't heard of that one before. I heard of Two Road where you can rent out your car and so forth, right? Then obviously you can Airbnb out one of your rooms or your house or something like that. So I heard of those two, but that's a really good one. If you can kind of rent out, if you got some decent space, and it sounds like you do, some extra space. Some people need another car spot, stuff like that. Definitely for boats or whatever. That's pretty cool. You definitely love to make money.
Yeah.
When I hear people say that, because I say it sometime, it reminds me of the Christmas Carol, and when the three kind of ghosts come, right? One of the ghosts, it has this little jingle or something. It says, I love money, or actually he says, I love life. But anyway, it makes me think of that, and I turn it into money. I love money, money and I, or I love money, money loves me, money and I fully agree.
Just to give you an idea, my grandfather, who's now deceased, but when he was alive, he used to call me moneybags. Hey, moneybags.
I love it. I love it. So you got to obviously you have to like to make money if you're in these markets. You want to do that. So what instruments do you currently trade now, Andrew?
Let me see.
Primarily, what kind
Yeah, I don't do any cryptos. I don't do any futures. I just trade stocks, just pure stocks. Um, if I can find the right ETF, I'll trade an ETF, but just individual stocks.
Okay. And so when you're trading those, what kind of average position size, contract size? What's kind of the average you do?
Um, I'm a little bit of a chicken, I guess. I only do one contract at a time. So if I really have a strong conviction, then I'll do like in one expiration, I'll stagger them.
Hmm.
And then if I want another position, then I'll move it out maybe a week or two out. But the type of trading that I am currently doing, once Trump went into office, I just he's a narcissist. He doesn't care about the Constitution. He's going to do whatever the hell he pleases. It's going to cause disruption. It's going to cause uncertainty. I need to hunker down and be as conservative as possible. And so basically, I trade the wheel option, and I trade it on a weekly basis with the goal of making 1% per week. So I'll look at the 1 year chart, and I'm looking for a stock. I must love the stock. It must be profitable. It must be dividend. It must be something I want to buy and hold for the rest of my life. And if I can get it at a discount, I'm going to get it at a discount. So when I first enter the position, I have two choices. One, right now, for instance, U.S. Steel, it's low, but I think it still can go lower. I think it'll get at or below 40. So what I'll do is I'll sell a put on that one, and cash secured put. And so I'll sell it. I have one expiring today, and then I have one at 37 expiring next week. And then come Tuesday when the market opens, I'll open another one for 14 days from Tuesday. So that's what I'll do, and maybe like a 30 delta, or in this case, it'd be $40 because I'm happy to own it at 40. So if that turns out to 30, 38, 40 delta, I don't care because I'm happy to own it at 40. And then once I get assigned, I'll sell covered calls on it on a weekly basis with the goal of getting 1% per week. Now, it might not always work out, but that's the goal. So
Okay.
in the end, I'm trying to get 52% per year. Now, if I end up with 40 or 30, anything above 25, anything above 20 or 25, I'm very happy with.
So you're selling these cash secured puts or the covered call in basically a week time frame, and you're trying to collect 1% every time you do it. Is that 1%? That's 1% off the capital used. So are you using a margin account, a IRA account, a cash account? What type of accounts are you using, Andrew?
Yes to both. So when I first started trading options, I started off with a margin account, and I started off with something like $5,000 or $10,000, and then every few months I have to go to my wife and say, "Hey, baby, look, I'm making money," and then she would allow me to have another 5 or 10. No, it's my money, and I could use more, but we don't do anything unless both parties agree to it, because it's both our money. We have joint accounts.
Okay.
So So I don't want to do anything without her permission, consent, because if things go wrong, I'll never hear the end of it. So
Absolutely, and you should be consulting each other. Um,
yes.
and so, how much are you, if you don't mind sharing with us, Andrew, how much are you trading with? And you can provide ranges if that's
No, no,
if
no,
that's
no. I am an open book. Anyone who wants to look at my trades, anyone who wants to look at my paperwork, I am happy to share anything. This is what I do. It's not who I am, so it doesn't reflect like my value as a person. There's a pile of money in Vanguard making play money. You'll be impressed with that, but you don't have to be impressed with my TastyTrade account, right? So, um, so I started off with $5,000 or $10,000, and then over time I just slowly built it up.
Mm,
And then last year around November, December, I think I went from 40 or 45 up to $50,000. So as of January 1st of this year, I had $50,000. About November of last year, I was talking to my wife. I was like, "Hey, baby, you know these Vanguard accounts? We have four of them, but Vanguard account number three, that one's my retirement account or one of my retirement accounts. How about we take some of that money and move it over to TastyTrade?" And she's like, "It's your money. Do whatever you want." So I was like, "Oh, baby, I got another 50,000." So I have 50,000 in one account, 50,000 in another account. The challenge that I had was that in the IRA account, when you place like a put, you sell a put, it has to be cash secured, which means something like 90 or almost 100% of the
mhm.
value of the stock has to be set aside as buying power. So then it took me a while to figure out. I tried different, trading techniques, but this one, basically the will or buy right in a margin account really, really seems to work out very well. Normally we'll say, okay, buying power, keep it between 30, 40, 45%, somewhere in there. Well, on an IRA account with this type of trading, I'm trying to hit. I'm looking at it right now. I only have $1,900 not being used. So, and the only reason that's not being used is I don't have something else that I can fill. um, yeah. So basically, I'm trying to max out, because what happens? Worst case scenario, I get assigned 100 shares of a stock that I want to own for the rest of my life. I'm not fearful of being assigned. I want to be assigned because I'm going to turn around and sell weekly 1% covered calls.
Okay, and so just to kind of add to that, here at Dorian Trade, we talk about using usually no more than 40% of your account.
Yes.
But when you are doing the kind of wheel strategy, what we call here the Dorian, or the safeguard strategy that we call here at Dorian Trader, you can use more of your account. You can use up to 90, 95. Sometimes you might even be using 100% because you can take ownership of the shares and everything is covered by cash. So that and when you're doing that type of style, you have to use more of your account anyway just to be able to get a decent percentage. So that's what Andrew was talking about. Andrew, let's talk about performance a little bit, right? So, how have you done like last month? How you doing this month? How have you done so far this year? Kind of give us a background a little bit on how you've been doing.
Yeah, I'm going to get to that in just one second. I just want to point out that when I say 1%, it's
Mm-hmm.
1% of the trade. So if I enter a position on a $20 option,
Mm-hmm.
that means $2,000 is being put aside.
Mm-hmm.
1% is $20. So I need to make 20. And for instance, X US Steel, it's I want to get assigned at 40, so I'll sell a put. So I need to get at least $40, right? So that when I say 1%, that's what I'm talking about. And that's why if you're able to do it every week, you should make a minimum of 52%. Okay, to
Okay,
answer.
that's a good clarification. I like
Yeah.
that, and it makes it, and you're doing it on some of these stocks like U.S. Steel. You can definitely, you wind up getting $20, absolute dollar amount. It might not look like a lot, but percentage wise, that adds up. So thank you
Oh,
for
no,
clarifying.
no, 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 no. No, no. It's better than that because with US Steel, 3 days ago, I entered a position.
Uh,
I collected 107. There's $2 remaining in the trade. In
mm,
about 20 minutes, I'm going to have that full 107, right? And that was at 39. So I'm getting way more than 1%. So US
but
Steel is,
that's your minimum then.
yes,
Okay.
yes.
Okay.
So if I can't, when I'm selling a put and I can't get a minimum of 1%, then I'll check it the next day or the next week to see where I can. And then with my trading, when I look at a stock, preferably if I can, humanly possible,
Mm,
find stocks where if you look at the money and you look at the 2, 3, 4 strikes above and below it,
mm,
it'd be out of the money. Um, I want 1%. I want 1% on those 3 or 4 strikes. Now, if I look at a stock and it has 1% at the money, it's like, there's not much room for error there. So
mm.
that's just like when I'm extra picky. Ideally,
Okay.
I'd like to see
And
three
so
or four.
and when he's saying up or down, you're talking about either the put side or the call side, trying to get that 1%, correct?
Yeah, yeah. In really, because I'm talking about entering it, so that would be the
Correct.
put side, out of the money strikes, 3 or 4 of them, at
Mm,
least 1%. So the highest I've seen is like 5 or 6%. So it all depends on the individual stock. So like right now, I'm in love with X at $40 or below. I'm in
Mm-hmm.
love with oil at $50 and below.
Mm-hmm.
And I was in love with AAP until they came out with earnings. The stock shot up,
Mm-hmm.
and when the day closes today, I will walk away with $1,100.
Okay, so your share is gonna be sold away. Okay, so
Oh yeah.
just quick question: how often do you start with the buy right? How often do you start with that covered call?
So trading is a growing process. You try different techniques, you try different ideas, and you have to figure out, who am I as a trader? I am conservative. I don't want necessarily capital appreciation. I'm in it for the income. The idea is, when I'm retired, I want another $1,000 to $2,000 on top of my Social Security. So I want the income. And what I'm doing now is I'm training myself with $100,000, so that way when I have permission from the wife, I can up that to $250,000. I
Mm-hmm.
don't think she'll give me more than $250,000, but I have a $250,000 spinning out 1% per week type of thing. So I'm trying to do this on a small scale now, so that way years from now, I can do it on a big scale and live on a fat foot or a big foot.
Okay, so tell us about some performance, Andrew.
Oh, yes, yes, that was your original question.
Yes.
Okay, so in my regular account in 2025, in January, I made 49.9, February 46.6, March 33.9, and April 26.1. Yes, I know, I can think of that too. It's a downward slope, but I think it'll go back up. In my IRA account, then that was the IRA January of 2025, I made 65.9, and that is what got me on this interview, was that banger month, a really good month. In February is 19%, March was 10%, and for the first time in my life, in April, I had a losing month, and that was negative 36%, which came out to a $1,400 loss. But I'm okay with it because I know I will make money, right? We're not going to hit home runs every day. You know what I'm saying? In fact, I don't want to hit home runs. I just want to hit base hits, small, steady, consistent. I fixed my account. I'm doing the right thing. I have a good program. I'm going to keep winning.
So that's really good performance for a will type of strategy. And that's monthly type of performance. I know I saw that in January, but that's monthly type of performance to be able to confirm, right, Andrew?
Yes, that is correct.
Okay. Okay. All right.
But wait,
So
those numbers that I gave, those are annualized. So when I say 65%, 0.9, that's an annualized percentage return. Yeah.
okay, so and so it's not you're saying that, okay, in the beginning of the month or the beginning of the year, I was at a 65% gain possibility by the end of the year. Now I'm at like a 20 something percent gain on the possible year, or with one of the accounts, I'm looking like negative right now, but that can change. Is that what you're
Oh, yeah.
saying?
Yeah, yes, and I'm
Okay.
fine for this month. I'm up. Let's see, what is it? $1,100. No, yeah, 1,100 before the close of today.
Mm.
$1,071 as of last Friday, and 508 as of last Friday on the retirement account. Now, now remember, like, things are always changing, and I think I've been doing this technique that I'm using now for
Mm.
about the last month, maybe 6 weeks, somewhere in there.
Mm.
And so it was a learning process for me, and I'm still slowly moving as trades close. I'm opening new trades under this technique that I'm using.
Okay, so why that kind of leads me to my next question is what kind of changes and strategies that help you achieve the kind of monthly kind of standout results? But it's what are you doing to focus on improving? Why is this new kind of way kind of new? I guess I should say. Why do you make changes?
Um, I, I'm very conservative.
Mm-hmm.
I want something that's consistent, low risk, and um, I feel that if you're selling a put spread or a call spread, your the worst case scenario is that you lose the money in the spread, the width of the spread, less the credit. So that's your maximum loss. The way I'm trading now, the maximum loss or worst case scenario is that I have to own 100 shares of a stock I want to own that pays a dividend, right? Now,
But technically it could go to zero, and so but most
yes,
likely it won't,
yes.
right? It's
So,
not a 0% chance, but it's
so
close to that.
but you look at, what stocks are we trading? The ones I'm trading are dividend kings, dividend
Uh,
aristocrats,
okay.
dividend contenders, right?
Mm.
So I'm looking for companies that are stable, that are paying, that are not likely to go out of business. So it's not ever 100%,
Mhm.
but I think it's pretty damn close.
So it definitely, I agree with you on that, especially if you're doing ETFs and when you're doing it, and we talk about that. But you've been finding a little kind of space, kind of special space for yourself to do
Yes.
on certain stocks, which is great. So it's been working, and if you keep trying to kind of redefine it, just little improvements, then I think you can continue to have really great results. Um, so what are you kind of focused on right now for improvement, if any, Andrew?
Yes. Okay. So really, what I'm trying to do is I'm trying to perfect my will trading slash buy right strategy. I'm also trying to. So let's suppose I get assigned 100 shares, and
Mhm.
then the stock drops. So my natural tendency is to say, okay, I bought it at X. I will go out in time, preferably not more than 60 days, not more than 90 days, and sell a covered call. Right? That's the very safe thing to do, but I won't make as much money. The next the thing that I'm trying to work on is selling something 7 to 14 days out, a covered call 17 to 14 days out, and it's below my break even point, and trying to get 1%. But the worst case scenario is like, dude, I'm going to get assigned and I'm going to have 100, 200, $300 loss. So I'm trying to get comfortable selling in the money covered calls. Um, no, I'm trying to sell out of the money covered calls that have a delta, preferably around 10 or 15%. Now, I won't get that 1% always, but I'll get something on a weekly basis. And I prefer to get like $10 or more, with $10 being a minimum. So that's something that I'm working on. I'm also working on getting comfortable with buy rights. So my natural tendency is to do cash secured puts
Mm.
and get something at a discount. But what I found is that when I approach a stock, it's already at like a 52-week low or very close to it. It's showing signs of it like 1, 2, 3 days to the upside, get in, right? And then you're trying to ride it up. So I've done little experiments where it's like, okay, on this one, I think it's going to go up. I'm going to sell a cash secured put and I'm going to buy ride it. And when I buy ride, I seem to do better. You know what I'm saying? Because now I can sell covered calls every week instead of making $80 with a cash secured put when it goes up, and then I'm out and I can't get back in, or I don't want to get back in because now it's no longer near the 52-week low.
Mm.
Um, I do the buy right, I sell the covered call, that covered call expires, I make the money, I sell another covered call, and I just keep doing this over and over and over. So that way I
Okay.
have a weekly income. So that's what I'm working on.
Okay. All right. So, for time purposes, I'm just going to say you should consider that Bionic Bull as well. I know you've been
Yes,
talking about it.
yes, yes. So this trade, the AAP trade that I did earlier this week,
Hmm.
I really thought about it because it's like, earnings is coming out. I really feel this is going up. I did a buy ride, a cash secure put.
Hmm.
It's like now I regret not doing a Bionic Bull on that one because that's one of the things I appreciate about being a member of the Dorian Trader and having learned everything. I feel I have a toolbox of resources. So in certain situations, a Bionic Bull would have been fantastic if I had the money when the stocks dropped, when Trump did his things and the stock dropped, and like, oh my goodness, how low is it going to go?
Hmm.
That would have been time to do leaps, but I didn't have enough money, right?
Yeah.
The leaps, maybe that was like go to town on the leaps. Well, maybe not to town, 10% of your account or something. Yeah.
Let's jump to some of your wins and losses. Just for this is kind of like entertainment purposes, and then it kind of help people who are listening. What can happen sometime? Like what's been your biggest winner to this point, Andrew?
Okay, the biggest winner is what basically got me here to this interview. because I don't even remember what stock it was, but I had started to learn about leaps, and I sold the leap. I don't remember the underlying, and I went out something like 18 months, and I sold a leap, and it just shot up, and I made like over $2,000 in like 3 or 4 days.
Mm.
I was a rocket scientist. I was a genius. I invented the wheel, sliced bread, and everything good. So then, because I was so smart, I then went out. I was like, well, one is good, two or more are better. So I went out and I did more leaps, and
Mm.
those didn't go so well. So, so just because a hammer works in one situation, it doesn't work for every situation. And so that's one of the things I have to work on is like, okay, when you get excited about something, just stay logical, stay cool. You know, you just got to control the emotions a little bit and just really be careful and patient for the right opportunity.
What
And when I see the new opportunity, I'll jump at it assuming I have the money to do it. Yeah.
what about your biggest winner, Andrew?
Well, no, that was the biggest winner.
Excuse me, the biggest loser. I'm sorry, I apologize. The biggest loser.
Yeah, yeah. So, um, so I still remember it. So I had joined the Dorian Trader, and in my excitement, I did things, and I take personal responsibility. It's no one else's fault. I entered too many positions. I didn't really understand getting in. I didn't understand getting out. I didn't understand, if you told me how much did you lose, I think it was $3,000 or $4,000. But honestly, I don't know. And the reason I don't know is because I couldn't calculate it because I didn't have the knowledge. I wasn't learned enough at that point. And so I think I lost $3,000 or $4,000, and it was about November of 2021. I remember being on vacation and I was stressed out. And that was another lesson. It's like, if I'm stressed out, if I'm not sleeping, if I'm thinking too much about my account, then I need to change it and be more conservative. So I sleep like a baby. I don't worry about my accounts because everything I'm doing is conservative. That's great.
Okay, awesome. So 2 more questions, you guys.
Yeah.
The next question I want to ask you, Andrew, is what mindset or habits do you believe separate profitable traders from unprofitable ones?
Well, kind of like what I was just talking about.
Mm-hmm.
Having a plan, knowing how to get in. Everyone wants to enter a business, but when you enter a business, you also have to know how to get out of it. When you enter a trade, you have to know how to get out of your trade. So you have to know what the hell you're doing. If you don't know, like, I don't know, I know nothing about zebras. I know nothing about 112s. I wish I knew more about some other technique. And I hear someone talking about some great trade, and I want to copy them. Don't copy anyone unless you know what the heck you're doing, right? And really understand it. So have a trading plan, know how to get in, how to get out, know what you're doing, know what to do if things go bad. Also, know who you are, your risk tolerance, and know what you're trying to accomplish. For instance, I'm trying to get income. I'm not really into capital appreciation. Have a trading plan, a written trading plan. I have one, and stick to the plan. And then never stop learning. The more you know, the more money you will earn, the more powerful you are. So that's what I'd say.
Okay, I think you mentioned this before, but I kind of want to end on this question, Andrew, and then we'll open it up for some members to ask questions. And so, what is your long-term goal with trading? What's your ultimate kind of what you're building towards?
Yes. So, long story longer. I was raised in a very poor family. Most of my family is relatively poor, and so there's something inside of me. There's like some illness that's like, I've got to get more, right? So I have enough money. I can retire now, but I don't want to, right? But whenever I do, I want to have the cash flow, the income, and I don't know what the number is. Right now I'm saying 2,000, it might be 3,000. I just want to be able to be anywhere in the world with access to a laptop and the internet and make money so I can do whatever I want. I can have security. I can teach my grandchildren how to do this. I want to help. I want my grandchildren. It's like, most people get allowances. No, baby. I set you up with an account, do some trading, 20, 30, 40, 50, $100 every week. Man, you're set. You're ahead of the races, right? So that's for them. But really, it's just security, income, challenge, and it's a passion. It's a hobby. I love to trade.
Awesome. That's a great ending, Andrew. I'm going to open it up for questions for members now. This took a little longer than I anticipated, but I think this has been good value, at least for me. But I'm going to open this up, Andrew, for unmute the mics for people so they can ask you some questions, if that's okay.
So I had the chat box open, and that 1% comment that I made was I saw there was a 1% question, so I read it and I interjected the answer. So,
okay, so tell me what the question was and answer.
Someone asked about, what do you mean 1%? And so then I explained that it's 1% per week. So the stock is $20, which means 1% is $20. So you need to put down $2,000, and 1% of 2,000 is $20. So I need to collect at least. And so that's another reason why I don't like stocks that are like $10 or less, and $20 is kind of marginal. So if I can get something like 25 to 50, 60, somewhere in there, that's kind of like my sweet spot, because then 1% is like $60, $40, $30, which is easier to manage for me. And someone would argue, well, $20, just do 2 contracts. This is something I need to work on.
Okay, so I've unmuted the mic, and so if you have a question for Andrew, let's do that. Let's do that now. And so Dr. Sophie is asking, are you basically doing the wheel strategy?
The answer is wheel strategy, yes. Buy right, yes. And then basically opportunistic. Whatever I see that, like if I see a leap opportunity, I try not to do spreads. But if I just did a spread earlier this week. If I see the opportunity, like AAP, it's near a top, a really high top, and my prediction is that it's going to come down after earnings. So I sold a put spread, a call spread on that.
Okay.
Andrew, the buy right though, isn't that buying shares to do a covered call? Isn't that a buy right? So that's the wheel, isn't it?
So there are actually two different strategies. With the wheel strategy, you sell a put, and if you get assigned, you sell a covered call.
Yeah.
Now, very close to that is the buy right, where you just buy 100 shares and then you sell a covered call. So like a buy right is kind of one half of the wheel, but the big difference is that instead of selling a put, you're actually going out and you're buying the stock. So I do both, mostly cash secured puts, but I'm trying to get more comfortable with buy rights.
Right, so you just start. It's basically where your starting point
Yes,
is.
yes.
So the starting point is either buy the shares, sell the call, or you're starting with a cash secured put. So either one, it's just your beginning point.
Yeah, so you kind of like, I'm using the example of U.S. Steel. I think it still has room to the bottom, so I'm going to sell a lot of cash secured puts. Once it gets around $40, I will buy 100 shares at $40 because I believe that's a very good stock at a very good price. So that's a price that I want to own it. So all my cash secured puts are at or below $39.
So what you're saying, Dr. Sophie, is correct, especially for the safeguard strategy. We don't start with the wheel. There goes the bell, you guys. Let me see what the market did really quickly before I forget.
Well, we all just got a little richer. We all just got a little richer today.
Yeah, we dropped a little bit at the end there, huh? So, all right. So, but anyway, the concept is that with the wheel, you start with the cash secured put, as Andrew was talking about. It's kind of rigid, and so with the safeguard strategy, you can start with any of those four that we talked about, and so that's probably where you're getting that from, Dr. Sophie. I'm going to ask a question. I'm going to give another question from Professor Sam. Professor Sam says, how do you determine how to enter your buy right? What kind of factors you don't have to go over great detail, Andrew, but what factors do you have to determine to do your buy right? Is it besides the 1%? Is it anything more than that, or is it?
So identify the stock you want to own at or near 52-week low, and you're comfortable owning it for the rest of your life. And then you also have to look at, okay, on the call side, is there premium there? Can I make money on a weekly basis? Do I believe the stock is still going to go up? So when doing a call right, I've seen people, and I really don't stick to this, I probably should, and that is you buy the 100 shares on the third day up. So once you feel it's hit the bottom, it's had on the third green day, then you buy the 100. So yeah.
I'm sorry, were you done?
Oh yeah.
Okay, so next question, real quick, kind of rapid fire, is that how do you manage the downside? This is from Sada. How do you manage the downside?
So that I did talk about that in the discussion, and the basic idea is if I get assigned 100 shares and now the stock has dropped, one idea is you can sell another cash secured put, or you can sell another put would be an idea. But if you don't want to do that, that's perfectly fine. So if you want to sell at your break-even price, and you probably have to go out a month or 2 months. If you want to change that, you can still sell below your break-even point, but as soon as you hit 40, 45, 49, you got to roll that baby. Roll it, and just keep rolling it. But do not close for a loss. You only have a loss when you close at a loss. Until then, it's just a paper theoretical loss. Do not lose.
Okay. So that's the whole concept. As long as it doesn't go to zero, you have the opportunity to still come back. So so Professor Sam, I think you had a question, and let's kind of do a rapid fire, you guys.
Yeah, the question that I have is buy right has a little bit of concern for me, depending on which stock it is. I think you explained a 52-week low is when you enter. But if you think that a particular stock is at 52-week low and that is at the top of the market, buy right is going to backfire on you. So how do you protect yourself from a deep decline on the stock price? Granted, you're still continuing to get 1% covered call.
You find a dividend stock that has been producing forever, that your mom, dad, all your relatives know, Clorox, Pepsi, Coca-Cola, Bank of America, that have been around before we were born, is going to be around after we die, right? And the stock that you want to own for the rest of your life. That's it. You're going to get in with a stock that you want to own, and you sell covered calls. Now, if you can't get 1%, that's fine. But just do the best you can to get the 1%.
Or don't do it. But Andrew, I super appreciate you doing this. I can't express enough how I appreciate it. So try to have a great rest of your day. And any last words, Andrew?
Let's make money.